On Point with Craig's Investment Partners.
The information provided here is general in nature. It's not financial advice. It doesn't take into account your financial situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. So before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services in that regard, you can go to our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics, including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. There's a lot of excitement amongst borrowers, particularly those with a mortgage renewal coming up. The message boards are full of people speculating on just how low rates will go and strategising how they should play it for maximum advantage. While this optimism is justified, some caution applies as well. If you're in the midst of that refixing decision, there are two things I think you need to be aware of. The first is that it's not solely about the official cash rate, the OCR. While the OCR is obviously really important, global economic conditions, wholesale interest rates, and competition amongst lenders can also influence mortgage rates. Remember that banks exist to make a profit, so their overall funding costs are a crucial driver of mortgage rates as well. Before lending you or I money to buy a home, the bank first needs to borrow it themselves, and they do that from a range of sources. People with term deposits and savings accounts have all lent the bank money. It pays them interest in return, and it then offers those funds out again for other people to borrow at a higher rate. Banks also borrow from the Reserve Bank and from international markets. All of these things put together can influence funding costs, which in turn will influence how much the banks charge for mortgages. Bank funding costs have been very low these last few years. During the pandemic, we saw the Reserve Bank introduce a range of additional monetary policy tools. You had the large-scale asset purchase program. You also had the funding for lending initiative. These things are behind us now, but over that period of the pandemic, they allowed the banks to borrow at a very low cost. That meant that when the OCR eventually started rising in 2021, these tools limited the impact of those OCR increases on mortgage rates. The 2-year mortgage rate fell as low as 2.55% in 2021, then it rose by 450 basis points to a peak of 7.05% in 2023. Now that's a big rise, but it's about 120 basis points less than the increase that we saw in the 2-year wholesale interest rate from its lowest point to its highest point. It's also about 75 basis points less than the corresponding rise in the OCR, and that was partly due to the impact of those additional monetary policy tools, keeping those bank funding costs low and allowing the banks to pass on less of those interest rate increases to their mortgage customers. So because those borrowers were shielded from the full force of rising interest rates back then, they might not see the same decline as interest rates come down the other side of the hill. Term deposits are another really important funding source for the banks, and these didn't go up by quite as much as the OCR either. According to Reserve Bank data, the average cost of all deposit accounts increased by 380 basis points from late 2021 until the middle of this year. Now that suggests that only about 70% of the OCR increase was actually passed through to depositors. Now term deposit rates absolutely have further to fall from where they are today, but they might not decline quite as much as the OCR, which will again potentially leave funding costs for the banks from that particular source slightly elevated too, and that will flow through to mortgage rates. It means mortgage rates might not come down quite as much because they didn't go up as much in the first place. International factors, such as a new US president with a different set of policies, can also have an impact, as these things can influence longer-term interest rates. Even though we saw OCR cuts in August and then again in October, our longer-term interest rates on the wholesale market have actually been rising over these past 2 months. My second word of warning is to remember that financial markets and the banks already have a pretty good idea of what's ahead. They can adjust their interest rates, their prices in advance based on those expectations rather than waiting. So even though the Reserve Bank is likely to cut the OCR again next Wednesday, probably by 50 basis points, that doesn't necessarily mean we'll see an across-the-board decline in mortgage rates the day after. The floating rate and the very short-term rates might react, but there's every chance that this move is pretty much in the price when it comes to anything lengthier than that. In fact, for some of those mortgage terms out there, you might even say that most of the decline for this cycle is already behind us. Financial markets see the OCR settling at 3.5% this time next year, in line with the average forecast from the big four banks. The 2-year wholesale interest rate is typically a little higher than the OCR, and then the 2-year mortgage rate has historically been about 2% above that. So right now, my bank is offering a 2-year rate of 5.65%, which using that rule of thumb is almost bang on to where it should be. That's down from more than 7% a year ago, so it's a decline of about 1.4%. Now, it will probably go down further, but it's not going to go down another 1.4% in all likelihood. So most of that move might have already happened in advance. That's something really important that people need to understand. I wouldn't say that this is quite as good as it gets for borrowers just yet, but we might be getting closer to that point than many think. So if you're on the cusp of refixing your mortgage, just remember those things. It's not all about the OCR. There are lots of things that impact mortgage rates, bank funding costs, those sorts of issues, and the markets and interest rate pricing, mortgage pricing. All of that looks ahead, just like most financial markets do. So sometimes these things you're seeing on the horizon are already priced in today. If you're ever in doubt, it never hurts to get some good advice. Talk to your bank, talk to a mortgage broker, ask some people you know who maybe has been useful to them or helpful for them in the past, and go into that process fully informed. You will be better off for it. Thanks again for listening. We'll talk again soon.
For more insights, visit craigsip.com.